Hello and welcome to ET Now. You're watching IPO Central, and the company in focus this time is iValue Infosolutions. It's a company which is into enterprise technology solutions, providing comprehensive comprehensive and purpose-built solutions for securing and managing digital application and data. And it works with OEMs and other providers, system integrators to provide this kind of platforms or softwares or technology to other clients. This company's IPO is opening on September 18th, closes on 22nd. It is a price band of 284 to 299 per share. It's an offer for sale of 560.3 crores, and that values the company at little over 1600 crores at the upper end of the price band. And joining me today is Mr. Sunil Pillai, who is the promoter and CMD of the company, and Venkata Swarup, who is the CFO of the company. Sunil, let me begin with you first. Give us a sense of your company's operation. You are into the IT services and solutions providing market, but give us a business model that you have.
Yes, Sajid. Good morning to you, Sajid, and good morning to the viewers. Thank you for having us. To brief you about iValue, just before that, I would like to take a step behind and tell you about the team. We were, all of us, all the founders and co-founders of our organization, we come from an organization which was the platform of or a gateway of India for cybersecurity solutions. So to say that our underlining or the DNA of our organization or DNA of our people has been around cybersecurity solutions. So we come from that foray. To start with, iValue incorporated in the year 2008, and we started with cybersecurity as a market segment, and we forayed into that. And while we doing my cybersecurity business, we realized that there are other new avenues being opened up in the market, that is in the ILM space, the DCI and the ALM space. And the cloud space, of course. So we forayed and we have diversified our growth prospects into multiple market segments, which include cybersecurity, ILM, DCI, ALM, and the cloud piece. And we have we have been in India we have been running this organization for last about 18 years now, and we have 9 offices across India. We are one of the few organizations that has forayed beyond Indian boundaries, and we have opened up our operations in SAARC countries as well as in Southeast Asia market. While the base is small, but the growth is very fast over there, and we have greater revenues and growth prospects in those regions. Typically, right now, iValue as an organization, we are sub 500 people catering to this market. We have a great potential and a great growth prospects in the next 10-15 years. That's a paradigm shift that is happening in the industry, and we are ready to cater to those needs. Thank you.
Mm-hmm. So, give me a sense of the business model and the revenue model that you have.
So the business model, we form a very critical player in the supply chain that we do. We have the original equipment manufacturers, which we call them technology vendors, and they are based across the globe. We are known for bringing new and niche technologies and introducing them or anchoring them in this market. We understand the customer's insights, we understand the customer's need, the business requirement, and we curate a set of solutions from multiple technology vendors, multi-stack it, and we take a very highly consultative approach with the customers, that is the enterprise customer, the original users, and we do business only through system integrators. While our engagement would be in a very consultative approach with the customer, but all our billings and all our transactions happens through a system integrator, and they are our primary customers.
Mm-hmm. Give me a sense of how big is this business growing, and what is the rate at which it is growing? Because while you say that you get the services from the OEMs, but you work with the system integrators. So what is the kind of opportunity that you have in this segment?
So the greater advantage that we see with ourselves is that since we have served about close to 6,000 plus customers in the last 18 years, we have deeper insights about the customers' digital transformation or digital journey that each one of them are taking. End of the day, if you notice that every customer is serving some customers in the market. So we understand that business needs, we understand the technology that will play a pivotal role in their journey and in establishing or making an outreach for those customers. So what we do typically is that we bring all these technologies. We have a center of excellence center in Bangalore. We curate all those solutions. We show the impact of those solutions for a customer, and the customer is able to establish a very meaningful decision before buying the product. So they get to validate the impact of the solution that they are going to adapt to. So that is one of the best unique positioning of ours, and this gives a jumpstart to a lot of OEMs, the technology vendors. There are a lot of niche technology vendors who are coming into India, and we become the gateway of India for them. They can do a dipstick, they can do the litmus test through us, wherein we curate their solutions along with other existing OEMs, and we position and showcase those solutions to the customers. This way, what happens for a OEM is that they get an instant gratification of certain called out customers where we can go and position our solutions. And since we have a base of 6,000 customers, we have been able to categorize those 6,000 customers within the market verticals. So we can pick and choose a vertical, we can pick and choose a customer in that vertical and go and showcase these solutions. So for an OEM, we become a platform for a jumpstart their business. Besides this, what happens is that even for system integrators, we actually complement to their existing business. We go to the end customer and we do some level of heavy lifting in terms of showcasing those solutions, which actually saves a lot of time from a system integrator's perspective, because already the customer has seen the solution that we have shown. They are ready for those solutions. They just have to choose the system integrator to implement the solution to them.
So, Rup, come in here and give me a sense of your margins, because 12.36% is the margin, while it has fallen from 12.7 in the previous year. Is the margin for you in this category around 12 to 13%, or there is enough headroom or levers available for you to increase the margin?
Good morning. iValue as a company has been one of the pioneers in this segment across the 4 verticals, which is cybersecurity, ILM, data center cloud, and the application lifecycle management. This is a very, technology-rich segment. Understanding of the technology is one of the biggest strengths which we bring onto the table. Coming on to the margins per se, the margins, we look at it on the gross sales of the company. The gross sales around 2,500 crores is what we have done in FY25. You can see that in our RHP and other things. Our margins have been consistent and are growing. And we believe that there is some headroom for the operating leverages to kick in, thereby positively impacting our bottom lines.
Give me a sense of your accounting standard here, because I was looking at your RHP. While you said that gross sales is around 2,500, you have taken on a net basis for your software and software development and software allied support and IT enabled services are taken on a net basis, while hardware is a pass through in that sense. Since you do not make a direct manufacturing of hardware or production of the hardware, why isn't that as well that taken as a net as well?
Yes. Again, as Sunil has explained, we are a technology aggregator who work with 100 plus OEMs, bring their technologies to India, and then sell it to the end customers through the system integrators. For us, as a business model, we understand what the client requires and offer them. A hardware or a software is differentiation which we don't make as a part of the business. But we are bound by the accounting standards, we are bound by the laws of the land, wherein we have to make this differentiation between hardware and software. The Indian accounting standard, as advised by PwC to us, says that the hardware which is there, because you have a touch and feel of it, you have a control of it, can be treated as a gross basis, whereas the software which is coming with a specific end user name mentioned in it to a specific end user is taken on a net basis. Hence we see an approach which is there. And this approach, I'm sure, is globally followed by other players also, and in India also. This is more and more companies are adapting this accounting approach.
While on a net basis, what you're saying is that you take only the commissions as a net revenue for you. what is the kind of net commissions that you get or the margins that you get on hardware? Sunil, if you can elaborate on that.
So typically, Sajid, now we don't differentiate between hardware and software. It used to be there once upon a time. It is no more the thin line that was that has been erased. So we talk about solutions. So the solution can come in the form of a software, typically which will go on a hardware. But then there are certain OEMs which come with an hardware-based solution. That means they burn the software onto the hardware and they position the solution. That is the reason being hardware is sensitive to the software or the application that is developed by the OEM. Hence, they OEM the hardware from other manufacturers and they purpose build the hardware with their solutions and then render it to the customer. So between hardware and software, we don't differentiate as such, but margins are flat between these two because we go based on project based. And we are north of 10% in terms of our average GM, and we think that we can sustain and continue to maintain that.
So, from a street perspective, if the street was to look at your top line, they should be looking at your software and allied support and IT enabled services for the margins and growth, because hardware would be a pass through in that sense.
Not exactly, Sajid, because hardware and software, as I told you, it is part of the solution stack that we offer to our system integrator and to the customer. So there is a flat, there will be a margins which will be flat across these two as a consolidated and an average GM. So that's what we work on, and that's how we have been positioning ourselves, and that's what we have been recording in our financials also.
True reflection of our business.
Yes.
That is what we believe. And hence we would request the street also to look at on a gross sales basis.
Okay. Can you also take us through your international operations, because currently 11.6% come from overseas and remaining comes from the India business. So, what is the kind of growth that you are looking at in various geographies? And I assume that it's actually non-US and non-European territories that you are selling your softwares or your products to.
Well, Sajid, when we started this operation, we were this Southeast Asia market is to contribute only 1%. If you see last year, we have grown up to 11%, and the base is low, so the growth is faster over there. But the best part about it is that in India, we have about 50% of our resources, human resources, are in technical space, in the technology space, and they are upskilling themselves. But what happens to the skill that they have already adapted to? So what we do is that we are using our same resources to cater to this growing markets, which may be a little bit behind India in terms of technology adoption. But then when they adapt to those technologies, we are ready with our skilled resources, and we have been able to cater to those markets. So if you see the market like Bangladesh, Sri Lanka, Nepal, then the Cambodia, Singapore, Malaysia, and all these markets, they are the very fast growing market, and we see a great potential coming out of it. In the next few years, we think that they will hover somewhere around between 11 to 20% is what we feel. They will continue to contribute.
You mentioned in little earlier that you do provide services and products to data centers as well. Data centers as part of your total revenue, how much will it be?
Last year, the data center revenues, it contributed almost about close to 18% of our revenue, and it's growing faster.
And how do you see that growing in the sense, in terms of the opportunity that you see in data centers, especially when a lot of data centers are getting built in India itself?
True, Sajid, you are very right. In fact, if you see, that's a big buzz about happening around data center. There are many data centers in the anvil. It is going to come. They are mushrooming. So we see a greater potential coming out of this space, and we are very closely working in that space. So we are very excited about this space.
Another area which is also could be a concern is the top 10 OEM account for 63% of your gross sales. What is it being done to diversify your risk there?
Sajid, we find this to be very natural, very organic in nature, because the reason being we are a growing organization, and so there would be certain level of technical and the upskill, the technology know-how and the curator solution that I mentioned to you earlier, and the multi-stack solution. Obviously, by virtue of that, we would have certain level of concentration. But then, if you notice in the RHP also, we have been adding new technology OE vendors into our stack of solutions. Now, those technology vendors are the next breed of technologies that is round the corner. They are getting their footprint strong in this market, and we see a greater potential coming out of these technologies. And by virtue of those, while we don't degrow on the business that we have already been doing with our current 10 OEMs, but then we see that the concentration level will come down and narrow down.
Okay. What about the arrangements, because your agreement with these OEMs are from 1 to 3 years? Are you being able to renew them every 3 years? And is there a new, every time the renewal happens, is there a new terms that you sign with respect to the kind of rates that you you are going to offer them?
In the last 17, 18 years that we have signed with OEMs, we have some vintage OEMs. We have about close to 10 plus OEMs who have been there with us for last 18 years. So if you see, that's an age of those OEMs. Typically what we have seen is that once the OEM signed with us, and we keep building our relevance with the OEM, we keep building our skill set with the OEM, and we are sure that that we'll have a longer term with all the OEMs that we have signed up with.
Saurabh, can you?
The terms with which they work with us are only becoming more and more stronger and flexible towards iValue.
Can you also take us through your trade receivables, because that's also very high from the RHP. How do you manage that trade receivables? Because you have a high receivables, isn't it that you need to have a higher working capital also in that case?
iValue, again, as a company, is fast growing. We have been delivering cash flow from operations which are positive. You can see from RHP that it is, out of the last 3 years, 2 years, we have been cash flow positive from operations. From a receivables and payables perspective, we operate at a net working capital of around 40 days. I think this is a very good benchmark in the industry. The receivables, all the receivables which we have are credit insured, so we don't have a default risk per se. There can be some amount of delay, but there cannot be a default risk per se. And if you see the amount of receivables which we are offering, or the credit which we are offering to our customers, an equivalent amount is coming as a credit from our vendors. And we are one of the unique organizations which operate with very less amount of inventory. That all helps us to keep the net working capital days around 40 days, which is industry, I'll say it's a good norm in the industry.
Okay, gentlemen, it was a pleasure talking to you today. iValue Infosolutions. The IPO is opening on 18th, closes on 22nd. Price between 284 to 299. It's an OFS for 560 crores, and it values the company at little over 1600 crores. Thank you for joining today on ET Now.